Hello, welcome to the beginners class for crypto class for beginners. My name is Wilfred, and at this point we'll be looking at topic 3, which is the major technology used in crypto space. There are a whole lot of them. I think close to about 100, but that is not what we're going to do. I will just launch you into the few ones that you will need on daily basis that are very frequent and that you will use for your routine operations within the crypto space. Okay, so quickly let me take us to the list. If you've not watched the preceding topics, please you need to do that so that you can sync up the information correctly. Okay, then the first one there is altcoins. You'll be hearing altcoins is simply a word terminology for other coins that are not BTC. Okay, BTC is Bitcoin. Okay, and Bitcoin is the first cryptocurrency built on the blockchain, right? So any other coin that is not BTC, it is called altcoin. It is called altcoin. So starting from Ethereum, because Ethereum is the second cryptocurrency after the Bitcoin. So starting from Ethereum to any other cryptocurrency that you hear about that is not BTC, it falls under the terminology or under the category of altcoin. Bag holder, a person who buys and holds a coin in large quantity, hoping to make money, a good profit from it in the future. Yes, there are people who buy so much of cryptocurrency in their wallets. They're called bag holders, right? Bear market. This is very important. Bear market is the downward price action or movement when the price of a coin is going down, or the downward movement of the price of a coin or of the market is called bearish market. All right. Then bullish is the opposite. The word bear comes from, bears always like to pound anything down with their hand. Then the bull always want to pull anything up with their horns. So that's where the name came from. So bullish market is the upward or positive movement, upward movement of the price of any coin or of the crypto market. Then dump is an appreciable massive drop of a coin in price. Dump is when a price at a particular price of a coin, somebody decides to sell massively. Bag holders decide to sell massively. That's what will push the price down massively, and it is called a dump. Okay, it's like somebody just let go a whole lot of quantity of a coin to drop the price. That's what we call a dump. The opposite is the pump. All right. Sometimes such bag holders or whale, they call them whale, or the big banks, they will decide to just buy so much of the coin, and when they are buying, the price will be going up. It's called a pump in the price. All right, so we have the pump and dump. All right, dildo in marketing, in the crypto market, when you see a very long red or a long red candle or a long green candle, it is called a dildo. Okay, then we have FOMO. You'll be hearing FOMO. FOMO is the fear of missing out. FOMO, it has to do with, in cryptocurrency or in trading any form of currency at all, there are two issues. There are two basic enemies you'll be dealing with: the greed and the fear. All right. FOMO is the fear of missing out. You see a coin doing well, or you see a coin and you feel like, if I don't buy this coin now, I may miss it because I believe it's going to continue to do well. Then, because of the fear of missing out, you decided to do what? To take action. You decided to buy. All right. And sometimes when you do that, the coin may be at the reversing point, because coin prices don't move straight up or move straight down. Okay. So then we have the HODL. HODL is very common. This is to hold a coin and not sell. So when you hear the HODL, I'm simply telling you, talking about holding a coin. All right. Then the JOMO, joy of not selling. Yeah, is opposite of FOMO. FOMO, as I said, is the fear of missing out, while JOMO is the joy of not selling. What it means is that a coin was a coin went down in price and everybody's selling it because it's like it's no longer having value and they are afraid that it's going to fall more, it's going to lose more value, but you decided to just hold on and begin to bounce back. So you'll be joyful that you didn't sell. The market cap or market capitalization, this is the total value of the coin that is in circulation. Okay, the total value of the coin that is in circulation. It helps you to know the size of that coin in the market. So if there are 200 coins of that market in circulation and one is $1, that's $200 in capital of the total of the whole of that coin. So market capitalization is very important when you are doing your market analysis. It's very, very important. You'll be able to know the total fund or capital that is involved that people have invested so far in that very coin. Then the whale is someone holding very large amount of a particular coin in their wallet. They are the same thing as the bag holders. They will have the entry point, the take profit point. These ones are when you're trading your future, you want to set when to enter the market and you want to set when to take profits and go out of the market. All right. Then we also have native coins. These are classified as traditional coins. We use them to lock profit. Traditional coins in circulation are backed by equivalent amount of traditional fiat currencies like the dollar. The rates and the extent of volatile is mild. Okay, these ones have to do with the coin that they are digital coin, but they are tied to the same value as their paper coin. All right, so like the USDT, the BUSD, the USDC, all of these ones, they have the same value as the US dollars, but they are digital. All right, I have the stop loss. The stop loss order is you are telling the system that if the market is going down against me, please do not allow me to lose more than this amount. Okay, that's for people who are not trading spot, they're trading futures. Then the market order, that is still for futures. You want to just buy you want to buy a particular coin at the current price. You don't want to wait for it to go down more than that. You just want to buy instantly. All right, for spot traders, most times spot traders do market order most times. Yeah. Then limit order, this is an order to buy or sell a stock at a specific price. You want to buy the price is coming down, gradually from 0.1, it's coming down to 0.0, it's coming down, and you feel like you want to buy when it is far less than that, so you place that order. When it gets to that point to buy for you, then you have the base pairs. The base pairs are the coin that when you go into the market, when you go into a market, you have a particular currency with you, with which you want to buy another product. So when you are going to the market in crypto, the coin that you have with which you want to buy another coin is called the base pair. All right. So if you want to buy, for example, Kava, all right. So when you get to the market, you should either you will not look for Kava USDT pair. So it means you have to have USDT to be able to buy Kava. So the USDT that you will use to buy the Kava is what we call the base pair. You say you can find them under the market zone in Binance. The NFT is non-fungible token. Non-fungible simply means it cannot be replaced. Okay, so non-fungible tokens, transactions of collectibles such as art and music. Yes, not only cryptocurrency that is a crypto asset. Crypto assets are one of them is cryptocurrency. NFT is also a crypto asset. Okay, yeah, it's also a crypto asset that can be traded. And NFT is all transactions that has to do with have to do with arts and music collectibles. For example, if you can your picture, you can tokenize your picture, all right, and you can sell it. It will be on the blockchain, such that if I buy it, it will only belong to me. A certificate, the ownership it can be verified that I'm the owner, and nobody else can have that same copy of that your picture. Okay, we'll go into that details later when we get to the NFT area. Then NFA is something you'll be seeing very often, not a financial advice. When you see NFA, it's telling the person is saying what I'm telling you is not a financial advice. It's just I think is a way of sorry, excuse me. It's a way of it's a disclaimer statement that what I'm telling you does not mean that it's going to go exactly that way. There could be differences. Okay, so it's not the financial advice, and immediately you will see do your own research, which is DYOR. Do your own research. All right. So not the financial advice. Please do your own research. All-time high is the highest price that a coin has ever hit. All-time low, it is the lowest price that a coin price has ever hit at a particular space of time. Then you have the DEFI. DEFI is very important. Decentralized finance. It means digitalizing the conventional financial industry. This DEFI is very, very important. Some people call it DeFi, some people call it DEFI. It depends on how you are pronouncing your decentralized your finance, either finance or finance. So it's the same thing. DEFI is, to me, is digitalizing the conventional financial industry. You can see when we're walking through the ecosystem in topic 3, you can see that lending is involved, those who are doing insurance are involved. As it is, every form of the financial industry as you know it today, all right, starting from the banks to the stock market to the insurance companies to the lenders, to every part of that conventional industry is being digitalized by cryptocurrency using the blockchain technology. So that is why we believe that in the next few years from now, this conventional financial industry as we know it will go, and everything will be running on blockchain. All right, both contracts, everything will be running on blockchain, because you can do your insurance on blockchain, you can do your borrowing on blockchain, lending and borrowing on blockchain, you can trade your stock on blockchain. Even companies cannot tokenize their shares. Instead of going to buy shares of a company by going to a stockbroker and get the paper filled, and because you now have a stockbroker and all of those, you don't need that. The moment Google tokenizes their shares, I don't need to go to US or US citizens to be able to, or documents and all of that to be able to buy the shares. No, I just go to blockchain, go to access the blockchain and just buy the token, buy the shares, all right, in a tokenized form. So that's one of the major this is one of the major reasons we believe that blockchain technology, cryptocurrency is the new world of finances. All right, I've talked about market capitalization. I said capitalization is the value of total currency in circulation. Total coin times market price will give you the market cap. This is very important when it comes to market analysis. Then the contract address. This is another thing, another term that you will always be seeing. All right, contract address, the token or coin address on the blockchain. Yes, for every coin must have a contract address. Okay, let me liken it to your internet, to our internet. All right, if you want to visit Google, you go to www.google.com, because that is the website address on the internet. Same thing with the cryptocurrency or the blockchain system as well. Every coin that you see is created on the blockchain with a contract address. So for you to, every coin has their contract address. You will be able to locate a coin on the blockchain with their contract address. So when we go further, you'll be able to know how to apply this. All right, so with this, I'll stop the video here. There are so many other, just do a research. Just do a research, okay? It's just search for, so that you can have more information. All right, thank you very much. Let's go to the next topic, topic 5. Thank you.